Hey, welcome back. It's Jason Walter here. It's been about 2 weeks since I last posted my real estate market update. So I want to give you an update because so much has changed in such a short period of time. And I know a lot of you have been commenting in my videos about how home prices are going to be declining. We're going to see a lot more foreclosures. So I definitely want to address that as well. This video, I'm going to be showing you how this pandemic is affecting the real estate market, not only across the whole entire nation, but also across the entire state of California. And at the end of the video, I'm going to be sharing some local real estate market stats for Sacramento County, which is where I live. Due to this pandemic, lenders have been tightening their standards for new home loans. In fact, I did some research this morning. I noticed on Wells Fargo's website, it actually says that they are not accepting any new applications for home equity line of credits, and those are HELOCs. I did some searching and I noticed that Chase is also doing the same thing. They're following suit with Wells Fargo, and on their website it says that they are not accepting any new applications for HELOCs due to the economic uncertainty created by COVID-19. I searched some other lenders as well. Bank of America and Citibank, however, are accepting new applications for HELOCs. Obviously, some lenders are concerned about extending credit to new customers right now amid this uncertainty that we live in right now. And this is really no big surprise because over 33 million Americans have lost their jobs in the United States after an additional 3.2 million filed for unemployment benefit claims just last week. And by the way, if you're interested in following the unemployment benefit claims, they post those every Thursday morning. In addition, the Mortgage Bankers Association, or the MBA, reported last month that nearly 6.99% of the mortgages out there are currently in forbearance, which is a mind-blowing number. If you missed my update about loan forbearances, I just posted that just a couple of days ago. I'll leave a link in the description below for that because I discussed some major pitfalls with the loan forbearance program. And again, that was part of the CARES Act. So how does this all affect our real estate market today? I do have some real estate stats to share with you. I think some of you may be very surprised to hear what's going on in our real estate market. And by the way, I hope you're getting a lot of value at this video so far. If you are, please hit the like button. I greatly appreciate that. Also subscribe if you haven't done so already. I post videos about how this pandemic's affecting our real estate market as well as personal finance topics. Okay, let's talk about how this pandemic's affecting our real estate market across the entire nation. And according to Freddie Mac on April 13th, they stated the following. They said the fiscal stimulus provided by the CARES Act will mute the impact that the economic shock has on home prices. Again, the CARES Act provided a moratorium for evictions and foreclosures, $1,200 stimulus checks, and relief to our small business owners, just like publicly traded corporations like Ruth Chris Steakhouse. Additionally, Freddie Mac stated that forbearance and foreclosure mitigation programs will limit the fire sale effect on home prices. So clearly right now, people are not being forced out of their homes. Like I mentioned in my previous video about loan forbearances, this is a program that was approved by the CARES Act for people who have a financial hardship due to COVID-19. And this is a program that allows people to either reduce or stop paying their mortgages altogether for 180 days and potentially for another 180 days thereafter. I also expressed my concerns about this program, but I still feel it's far better than foreclosing on your home. Freddie Mac also stated the following. They said that two forces prevent a collapse in home prices. First, the U.S. housing markets have a large supply deficit, and I find that this to be very true. There's a definitely low inventory across the United States. Also, second, population growth and pent-up household formations provide a tailwind to housing demand. Price growth accelerates back towards a long-run trend of between 2 and 3% per year. So they are calling for a 2 to 3% appreciation in home prices this year. I agree with these statements by Freddie Mac, and that's because housing inventory is very low across the nation, as well as in California, for example. That creates a very high demand for the houses that are on the market that are priced right. And this is basic economics of the law of supply and demand. For example, as you can see from this graph, which was compiled by the National Association of Realtors, you can see that housing inventory is very low for single-family homes this year, especially compared to last year. On top of this, Realtor.com released their April 2020 real estate market data, and I'm really actually not too sure about how accurate these figures are, but I want to give you multiple sources, so I'm going to be sharing this information with you today. They reported the following. They said that national inventory declined by 15.3%. They also say that inventory of newly listed properties declined by 44.1% over the past year. On their website, they also state the following. They say that inventory continues to decline, partially due to the pause in newly listed properties, but also likely due to some sellers opting to delist. However, properties which are not delisted are spending longer on the market. The nation's median listing price growth continues to decelerate. So they are saying that home prices are also going to be increasing, but at a lower rate. Okay, let's discuss what we're seeing in our real estate market statewide in California. And the California Association of Realtors, or CAR, issued a real estate market update on April 29th. And they stated the following. Pending sales and new listings began to decline almost immediately following shelter-in-place rules, which of course were in mid-March. The California Association of Realtors also stated the following. They said the number of new listings increased in the Bay Area, Southern California, and the Central Valley, and were flat from the previous week in the Central Coast. Pending sales also increased for the third consecutive week after falling almost immediately as the shelter in place went into effect. New listings and pending sales still remain depressed relative to pre-crisis levels, and the recent uptick was very modest in nature. As a result, sales are expected to remain weak for some time. CAR also mentions that home buyers are expecting deep discounts on houses right now. However, home sellers are not really agreeing on that, and they were more likely to take their house off the market and delist it rather than selling their house for a deep discount. And this is really no big surprise to me because we have definitely a seller's market right now, which means that there's far more buyers than there are home sellers right now. So the power is with the sellers. And you compare that, of course, with 2007 and 2008, at least in Sacramento County, we had about 10 times more houses available for sale then than we do now. So then it was definitely a buyer's market, but right now it's been definitely a seller's market. All right, let me share some real estate market trends that we're seeing in the greater Sacramento area. And I'm going to be showing some graphics here that are compliments of Ryan Lundquist of SacramentoAppraisalBlog.com. He also has a great YouTube channel, so I invite you to follow him there as well. As I mentioned in my previous real estate market update, listings that were placed on a hold status really shot up in the Sacramento area right around the time that Governor Newsom issued his stay-at-home order, which was on March 19th. And hold status just means that the house is no longer listed for sale, but it's not a cancel listing either. So it's like kind of in this limbo status. There have been about 750 holds since March 12th in the Sacramento region. And that's about 100 more since my last real estate market update, which was 2 weeks ago. However, when I made that video, there was an increase of 200. So they are increasing, but at a lower pace. Again, this is really no big surprise here because there's a lot of homeowners who really don't want to have strangers walking throughout their house during these times, which I can understand that, of course. So the big question obviously is what's going to happen with these 750 listings that were taken off the market in hold status? Will these eventually come back to the market? Who's to say? Cancel listings have also continued to increase as well. There have been 728 canceled listings in the Sacramento region since March 12th, and that is about 100 more in the last 2 weeks. Again, no big surprises there because of the stay-at-home order, even though some of those restrictions have been eased recently. Okay, let's take a look at pendings, which means that a seller has accepted an offer from a home buyer. As you can see, pendings increase until about mid-March when this pandemic became more prominent. Then pendings dropped the last few weeks of March, which seems reasonable because that was during the time that agents were not allowed to meet any clients face-to-face or do any showings in Sacramento County. However, pendings have increased ever since the beginning of April 2020. And this really makes sense with the easing of restrictions for agents to show their clients' houses. So again, on April 7th, they were allowed to show houses that were vacant suddenly. And then additionally, on April 29th, Sacramento County eased the restrictions further to allow agents to show houses that were occupied. And it says that the residential viewings for rentals leases, and home sales are now allowable when the occupant is still residing in the residence, and that was as of April 29th. So because of these less restrictions in place in April, it definitely makes sense that pendings have increased as well. Okay, so that was pending sales in the Sacramento region. So let's take a look at the number of listings and see how that's changed during this pandemic. So here's a graph to show you the number of houses for sale, which is in light green, and then sold, which is in dark green, over the last 3 years. So clearly you can see how much less inventory we have now compared to then. The number of listings are down about 26% compared to 1 year ago and 29% from 2 years ago. Let's have a look at how listings have changed this year alone in the Sacramento region. So this graph shows daily new listings in the Sacramento region this year. And what really stands out is that we had the highest amount of listings that hit the market for the entire year at the end of last week, with over 200 listings in one day. What's significant about this number, of course, is the high amount of listings that hit the market late last week, but also 2 days before that, it was when the Sacramento County eased the restrictions for real estate agents to show houses to include those houses that were occupied. So is that a coincidence? I don't really think so. The number of pending home sales in March decreased, and this actually caused home sales in April, or the following month, to decrease as well. Of course, this is understandable because April sales are from March pendings. So it takes about a month to sell a house. So when you're looking at home sales, that's really activity from the prior month. This graph is a bit busy, but you can see how homes for sale, homes sold, and pendings are quite a bit less compared to a year ago in Sacramento County. I mean, look at the number of homes for sale this year compared to last year at the end of April. So at the end of April this year, there was about 1,587 homes for sale, whereas in last April, there was about 2,140 homes. And that's obviously fewer homes for home buyers, which also causes the number of home sales to decrease. All right, let's take a look at home prices. So what do you think? Do you think that this pandemic is causing our home prices to decrease? Let's have a look here. The red line shows the average home sale price in Sacramento County since February of last year. And as you can see, the average sale price has increased 3 months in a row. In addition, home prices have increased about 5.5% to compared to a year ago. The key question here, is this a long-term trend or a short-term trend? We will see. I would imagine a lot of you are surprised by the increase in the home prices over the last 3 months. I mean, after all, we have record unemployment levels. A lot of our non-essential businesses are still closed. So I imagine a lot of you were thinking that home prices were decreasing right now, and obviously that's not the case. So let's take a look at this at a high level, and let me briefly explain my thoughts on this. Number one would be that the inventory is still very low, like I mentioned earlier in the video. So there's fewer options for buyers right now, causing a higher demand for those houses that are on the market available for sale right now. So this is basic law of supply and demand. Number two, and that would be that mortgage interest rates are very low. In fact, they are currently at record lows of approximately 3.2%, which is a crazy low number. To give you a comparison, when my parents bought their house in the 1980s, their interest rate was 15%, which is absolutely insane. Number three, in my opinion, people are getting used to this pandemic. And plus, like I mentioned earlier, there's fewer restrictions on agents able to show houses to their clients. However, will opening up the economy as well as easing of the stay-at-home orders, will that cause an increase of COVID-19? And if so, will that have a negative impact on our real estate market? I would love to know your thoughts on this, so leave me a comment below. Please subscribe and hit the like button and help support this channel. I greatly appreciate that. You also can follow me on Instagram. I'm Sacramento Realtor. I hope you have an awesome day, and I look forward to seeing you on the next video.